All right, fighters, listen, if you are paying more than $10,000 a year in taxes with your business, then you need to listen to this show. And then you also need to go down to the description, if you're listening to this on the audio version on the podcast, and hit the link that my guest Claudio Gambin is giving you. And if you're watching this on YouTube, hit the QR code. It'll take you to that same link, because for the first 100 people, he's going to give a free 30-minute consultation to help make sure that you're not paying more in taxes and that you're investing properly in yourself and in your future and not pissing your money away. Claudio has been a friend of the fight for quite a while, and we have a conversation today about how you can navigate your money better so that you're not just giving it all to our unreliable Uncle Sam who doesn't know what the fuck to do with it. So anyway, you probably get my feelings on that, but I appreciate you guys. Thanks so much for being part of the fight. And give us a review and share the show. And without further ado, here is my interview with Claudio Gambin. Claudio Gambin, what's going on, my man?
Tom, happy to be here. So thankful for the opportunity to be on your show today.
Yeah, I think you came in and did a special training. Was it December or January of this past year?
Yeah, it was December of 23.
Okay, yeah, and we were talking about taxes.
Yeah,
you know, because it's that time of year, end of year, and all that stuff, and it's funny. I was thinking this morning about some of the advice that you gave people, and one of the bits of advice you gave based on, and correct me if I'm wrong, but you were talking about, you were crystal balling with the future a little bit, saying that there were a bunch of arms coming due on commercial properties that was going to affect some things. So I'm curious what you've seen there. And then the other big advice you gave people was stack your damn cash, right? And so I'm curious, for those that are listening who are on that special training, how you're doing in that area.
right.
But what have you seen? Actually, before we do that, for those that don't know you, give us the 30,000-foot view of Claudio Gambin. What do you do?
Appreciate it, boss. We're consultants. So I always tell our possible clients and our current clients, we want to be third-party, non-biased consultants in your corner, helping you solve all of the business problems and financial problems that come about. So we work through asset protection, risk management. We work through tax strategy and implementation, growth, optimization. So most of our clients, not most, all of our clients are business owners. Most are in construction in some capacity. Mm-hmm. So really kind of mapping out growth and scaling and exit. And then we kind of get into succession and exit strategy. So, I came from the financial services world where I was a financial advisor, pretending to give advice to sell a product, which I think, 99% of all financial advisors these days are salespeople. Yeah. And I was just tired of that game. And I really wanted to work with people delivering amazing strategic advice for a flat fee, so they know that the advice they're getting is coming from a place that has zero bias. Mm-hmm. So I've spent the last 5 years building out the firm, and today we're growing, thriving in an environment that has a ton of uncertainty, right, Tom? Like what we crystal balled last year, unfortunately, we're seeing play out. Like we're seeing real estate taking a big dive, and it's going to continue to get worse. Now, look, do I think it's going to be 2008 all over again? No. But if today is 2006 and you knew 2008 was coming, like what would you do differently? Yeah. How would you treat your business differently? How would you treat your financials differently? Because that's kind of what's happening, right? Like we're seeing somewhat of a meltdown in our economic environment. So that's why we told people last year, stack cash. Why? Not because we're going to be scared, but because it's an opportunity, right? Mm-hmm. Never let a good crisis go to waste.
Yeah. During the 2008 recession, I remember saying to my business partner at the time, I said, when we get through this, I will forever treat this business and every other business I ever start, I will operate it like we're in a recession.
Yeah.
If that makes sense. So that we're already ready. We don't have to get ready.
It's such simple, basic concepts, but all too often what happens is we find success and we believe that just because we found it, it's going to stick around,
Yeah.
right? And then when we find it, the fundamentals that got us there kind of get a little lazy. We don't necessarily get as aggressive every single day. We get comfortable. But there are two main principles that I run every single one of my businesses by. There's a lot more than just two, but these two are really, really big ones. One, always run your business as if you are in a recession. Always, right? You've got to stay tight with direct and indirect costs. You've got to manage WIP. You've got to manage the business as if you don't know where the next job's coming from.
Right.
And the second piece is build to sell. Always build to sell. And this is where I think construction's to blame, like where they miss a ton. Most of our clients in construction, they'll say, I can't sell. I'm the business, right? My relationships with the business, my relationships with my subs, my relationships with my clients, I'm the business. Well, that's your fault. Because whether you choose to sell or not, if you build it to sell, at least you have the choice.
What are some of the low-hanging fruit boxes somebody can check from your perspective to build it to sell?
So the first thing that I always ask when I'm meeting with a prospective client, I said, hey, if you took a 6-month vacation, Tom, you didn't answer one phone call, you didn't reply to one email, what would you come back to? And if the answer isn't growth, then we're missing something.
Yeah.
Right? Like, look, I'm to blame, right? If I took a 6-month vacation and I didn't answer one phone call or one email, I'm not sure I would come home to growth. But that's my goal, right? I'm trying to build in key operational procedures on the back end, front end, and throughout so that it does get to that goal. So I'm working on building it to sell, because what happens is if you have an organization that grows despite of the owner, you have more than just a business. You have a possible investment. And what that means is anybody can come in and invest in your business and create an ROI without knowing your industry.
Right. Yeah. Yeah. It's the whole who, not how.
Yeah.
You know, who are the key people, key roles that need to be in place so you can take that 6-month hiatus if you chose to.
If you chose to.
Yeah. You know, when you asked that question, I was laughing inside because I'm like, if I just disappeared for 6 months, we'd probably double our business because the team wouldn't have the added chaos of me every day with new ideas all the time. So,
yeah. But I mean, that's the beauty of it, right? Like for most of our clients, when they do reach that pinnacle enterprise value is what we call it, oftentimes they create chaos inside the business so they can feel valuable.
Man, guilty. You got me. So I wanted to address, I think, two different groups of contractors that are listening to this. The first would be the smaller contractor who's, I don't want to say living check to check. That's too hard, but just, you know, they're not booked out very far. They're fighting the daily battle of building a business and building their brand and learning how to make money. What role does investment play for them right now? What would it look like in that scenario? And then on the opposite side, say you got somebody doing, you know, 8 to 10 million or more a year. They got some people in place. If you could kind of maybe break down for those two different groups of people, what you might consult them to do.
Right. So honestly, the advice is almost eerily the same. You know, when you're just getting started or you're kind of on the process of building and you are the CEO and the janitor, right? You're just kind of grinding it out. I always remind individuals that you are your best investment. For all of our clients, I remind them that you are your best investment. Don't lose sight of that. Stay in your lane. So like if you are in the grinding it out phase and you are just building it, right? Startup mode. Like think about the fact that you are building equity. It's not just a cash flow. Because if you go down the path of calculating what your hourly rate is, which for the record, don't do, right?
Yeah, it's depressing.
It's depressing.
When you're in the hustle phase, right?
You're building equity in your business, and the ROI that you're ultimately going to drive out of that business is the fundamentals of that is being built on a day-to-day basis with what you're doing. So remember that you are your best investment. Stay true to yourself. Stay true to your lane. Don't get distracted. It's so easy as a startup to let go of a strategy too quickly and move on to the next thing. Right? So the advice there that I often deliver is long obedience in the same direction. Find out specifically the key indicators that drive your business forward and do those things every day, no matter what. No matter what.
Yeah. So no matter what season of business, that's the advice there.
Flip side, right? Yeah. 10 million, 12 million, 20 million. You've kind of figured out WIP. You've managed cash flow. You can now understand how net looks. Same advice. You are your own best investment. You've got surplus cash flow. Where can you buy stock that's going to perform like your business can?
Yeah.
Right? You're outperforming Apple. You're outperforming Microsoft. You're outperforming Google. So why take money out of that business and move it over there? Take the capital and figure out where you can drive efficiency inside of your business. How can you buy your time back? How can you drive more profit? Where can you reduce costs by creating systems? Right? We can invest capital, create systems, and drive direct and indirect costs down, create more efficiency. You don't have to diversify out to make more money. You've got the golden goose.
Yeah, it's funny you brought up like the stock market and the returns and stuff. You know, in the fight, and a lot of contractors in and out of the fight, you know, they're shooting for like a 50% gross profit on their projects, right? So that means if it's a $20,000 job, it's costing me 10 to produce it and I'm keeping 10, right? And I look at that and I go, where else can you put 10 grand in and get 10 grand back like pretty quickly too?
Yeah.
You know what I mean?
Oh, yeah.
And get that 50% return. Now, obviously not all that 50% goes to bottom line profit. You're paying overhead and stuff, but
even let's just say 35% goes to bottom line.
Yeah.
Or 25% goes to bottom line.
It's still double the market.
Yeah. And you have control. And you're not even accounting for the equity that you're building in that value, because you deliver a good quality product. You've got a happy client. That's equity. That's social equity that will lead to more clients, that will lead to more ROI down the line. That's not going to happen anywhere else.
Well, and we're not even factoring, you touched on it there without saying it, but now we're dipping into lifetime value on that same investment. So it's like it compounds. So say like, I don't know if you want to talk percentages or whatever, you know, say somebody's listening to this and they're like, do they not invest in the stock market, or do they pick a percentage of profit? How does that work?
Yeah. So I'm going to contradict every financial advisor out there, because every financial advisor that you meet with like is going to be like, hey, no, you should diversify. You know, what happens if your business doesn't do well? You need an emergency. Bullshit. Pardon for language.
You can swear all you want here, man.
Yeah, right. So like, no, you should not diversify, period. So in my opinion, you should prepare for opportunities and threats. But I think diversification is very similar to a compromise. Nobody gets what they want. So diversification in this aspect is only really useful if there is a very direct reason for diversification. And the direct reason cannot be in case my business fails. Because as you and I know, if we're not all in into something, it probably will fail.
Right.
Right. So diversification is you subconsciously telling yourself, maybe I'm going to fail. Okay. So I don't have a percentage or anything like that, but I do like to create different funds for different uses. So here's the situation. If your business is your number one and best performing asset, you have full control over it, then let's double down on that with reason. Let's figure out what sort of capital requirements do we really need to invest back into the business to create maximum amount of juice until we've hit kind of a diminishing return, right?
Mm-hmm.
Create different silos of capital for yourself so that you have the ability to be able to double down in your business on a horizontal basis, right? So we can double down vertically, which means like if I'm in business, I can hire people, I can get more jobs. That's a vertical.
Mm-hmm.
Horizontally means, okay, well, now I'm going to use capital to buy a building that my business is going to operate out of. Okay. I'm going to use capital to buy a competitor that may be taking 10 or 20% of my market share. I'm going to use capital to create marketing that's going to increase my market share, right? So like those are not necessarily vertical investments, but more horizontal investments that's going to help grow the business. But I tell clients all the time, look at the landscape you're in. And specifically today, we have a very uncertain environment, right? We don't know what's happening from an election perspective. We don't know what's happening from an economic perspective. And I'm not fear mongering. It's just a reality of where things are. So right now, if I'm you, I am stacking cash, right? I'm absolutely building up my balance sheet. I'm paying down debt. I'm increasing liquidity. I'm getting rid of fixed costs that are not directly tied to revenue.
Mm-hmm.
And the reason I'm doing that is because I'm strengthening my business to be ready when the opportunity presents itself. The opportunity will likely look like bad news. So when bad news shows up, it's typically opportunity disguised. So that happens, and now we have the liquidity and the low overhead to be able to take risks in growing our business. Right? So, and if you are going to separate these dollars, make sure that the money you are putting into these things is one, always available. So liquidity is key. Two, it's efficient. So it's tax efficient or it's safe. And three, make sure the money, its primary purpose is not just to make money. The money's primary purpose is to support your business, not create a rate of return. So like a lot of times I'll talk to clients, I'm like, tell me about your liquidity, and they'll tell me about their investment portfolio. And I said, hey, in 2008, would you have considered that liquid? And they go, no, because I just lost 50% of the value. Well, then I don't consider it liquid today.
Yeah.
Right? Liquid means I can touch it whenever I want without the loss of principal.
Okay. So somebody finishes 2024, they got $100,000 of cash sitting in their business bank account. If you leave it there, you're taxed on it.
Yep.
So what do you do with it?
So that's a kind of a little bit of a deeper question, right? Because most business owners in that space, they're taking an S corp election.
Mm-hmm.
You can't really do anything to avoid that taxation, right? There's a lot that you can do to avoid that taxation, but you have to make a pretty serious and dedicated choice to stay liquid, and that comes with some taxes. Okay, that's a price you pay sometimes to kind of build up the balance sheet. Now, the bigger concept here is let's look at different alternative strategies to reduce the tax liability so that I can stay liquid without having to worry about the taxes. That's going to come in the form of tax credits. That's going to come in the form of depreciation. Those are two most important pieces there. Right? Most business owners are told, hey, you need to go spend money so you don't have to pay as much in taxes.
Yeah.
That's counterintuitive. Why would you spend $1 to save 30 cents?
Mm-hmm.
However, if you can invest money into assets or tools that will help your business grow, and in exchange you get a deduction or a depreciation of value, that makes more sense. So if the business has $100,000, they leave it in the business, they're going to get taxed on. Where can they put that $100,000 from a investment perspective in their business? Can they buy equipment? Can they buy real estate? Right? Can they prepay marketing? Can they do something that's going to move the needle forward in the business so they can avoid taxes and grow the business?
Yeah, and you kind of touched on my next question was, as a business, do you, even if you already have a building that you're operating out of, do you go buy another one and rent it out? Is that part of what you're talking about when you say
Yeah.
investing in real estate as a business, not as you as the individual.
Right.
Okay.
So the way business in general, right? We got top line revenue, we got operational expenses, you got gross profit, net profit. If we can start bringing in different investments that cash flow to the business, that create sustainable reoccurring cash flow to the business, that allows for you to be a little bit more predictable. So hypothetically, you are operating out of a facility that you're leasing, okay? Go buy something for you, because that's going to reduce direct costs. Now, even if your mortgage is the exact same as your current lease, you're building an equity in the building, okay? Now let's kind of talk through that. You spend $1 million on the building. Let's just say you take a mortgage out, you put 20% down, 200,000. You're going to be able to use something called a cost segregation study to do a full engineered study of the building and identify parts of that building that can be depreciated on a more accelerated basis, which means, layman's term, generally speaking, 40 to 50% of that building can be depreciated in years 1 through 5, which means that we could take it all in year 1. So now $500,000 of that $1 million building can be depreciated today at a 35% tax bracket, marginal and effective. That's $150,000 in taxes you just saved. So the true net cost to you to buy a building for yourself, $1 million building, was $50,000. And now you're building equity in the building. Your mortgage is being paid by your business, right? There's a lot more to that, but your business is not giving somebody else money. You're giving your own net worth money. And then next year, we go do that again, right? And we go do that again and again and again. Instead of giving Uncle Sam money, let's go build a real estate portfolio. That's all inside of the business umbrella, and the holding companies are all underneath the business umbrella, driving cash flow to the business, building equity to your net worth. When you sell the business, remember, because you built to sell and you decided to sell, keep the real estate, sign fresh 10-year new leases. All of a sudden, you've got cash flow.
Yeah. So it sounds like there's a buddy of mine who buys. He takes profit from his business, and the business buys a minimum of 2 single-family homes a year that he flips. And then he takes those in that cash and just puts, so same thing, right?
Yeah.
Just want to idiot proof it for the Marines out there. So, because we're not talking in crayon right now. So Marines, we have a little hard time figuring shit out. So it doesn't have to be commercial buildings. It could be, you could basically create an LLC or a holding company that purchases the flip or whatever.
Yep.
And so you're going to get the tax benefits and you're going to have the cash flow. So now you have a true asset instead of just paying taxes on whatever profit was sitting there. You got it working for you.
Right. And again, right, like we're simplifying something that can be relatively complicated, but it's really just that simple. If done correctly, you can buy real estate very, very effectively in a very tax efficient setting, help build the business's net worth, your net worth, along the way, paying less in taxes. It was designed to be something that allows for us to grow, not for us to not use. So, that tax code is there for a reason. It's there so we can take advantage of it and grow. It's funny that they say that the tax code was built for entrepreneurs, and I truly believe that. Our entire business model is built off of working specifically with business owners because that's where the opportunity to save on taxes are.
Earlier, you mentioned all the uncertainty and this and that. We're in election year. We're about 30, 35 days or whatever it is now from the election. You see a certain candidate getting on there going, I want the rich to pay their fair share. And all these billionaires not paying taxes and all this other stuff. For the remedial, what's the word? The minimally financially educated individual that just hears these sound bites. What's the truth behind all that?
All right. So Let's be a little controversial.
Okay.
It doesn't matter who gets elected.
Right.
It doesn't matter,
Mm-hmm.
right? It matters to a certain degree, but for most of us, whether you are just getting started or you are at a 7-figure income, it really doesn't matter. All of these sound bites, here's what's going to happen. Whoever gets elected, the market's going to crash. The market's going to rebound. Rates are going to change. There's going to be wars. There's going to be crises. There's going to be hurricanes. Things are going to happen. And the reality is you are responsible for your own future.
Mm-hmm.
The reason your life sucks is not because Joe Biden is president.
Right.
I'm sure it didn't help.
Right.
But if you're going to make something of yourself, you're going to make it because of you, not because whoever's elected is elected. Now, at the end of the day, there's certain pulls in one direction or another. So, for what it's worth, I do think it matters and you should absolutely vote. But for the most part, small business, man, it's driven on hard work, grit, and just getting after it every single day, not who's president.
Yeah, I've made money no matter what party is in office over the last few decades. So I get
Right.
that. I think, and I forget the stat. I heard it a few months ago. It was a nonpartisan, statistical website or some shit like that. I forget the name of it, but that the top 1% earners in America actually pay 40 or a little more than 40% of all the tax money. And when I hear it that way, I go, well, aren't they paying their fair share?
At the end of the day,
Yeah.
like they're segregating a very, very small, like billionaires, right?
Mm-hmm.
And billionaires take advantage of tax strategy because they have the ability to learn about the strategies. So they're not avoiding it because they're billionaires. They're billionaires because they made great business decisions, and using tax strategy is just another good business decision.
Mm-hmm.
Right?
Well, and the other thing is our government created the fucking tax code. Right.
And the strategies are available whether you're a billionaire or not. They're available for everybody. It's just being educated enough to freaking do it. Where the problem is most people
that's what I'm saying. Yeah.
They just wake up and they go, oh no, I've got a tax bill. Like, what the hell did you do about it? Did you think about this in October before the year was over? Did you do absolutely anything? Or am I now a victim? I'm a victim now, right? Like, it happened to me. I'm the problem.
Yeah. Yeah. And I just look at it and I'm like, well, these are the laws and they're operating within the law. So if they end up not paying any taxes, why are you pissed at them?
Right.
Why
don't
I don't
you
know what's so hard
learn
about that,
from them and maybe do it yourself?
Right. So what are some of those maybe little known tax strategies small business owners not taking advantage of right now? I know we talked,
let's do it.
Profits.
So here's the situation. So here's the thing. Like for anybody that's a business owner, what I'm looking at is I'm saying, okay, let's look at all the credits that are available. Okay, tax credits can be very, very effective. A great example was the EIDL, right? The economic injury disaster loan, right? There was also the part of that called the employee retention tax credits. Those are really cool tax credits that you could use. They're no longer available, and some people are still selling them. A little shady, but back in the day, amazing tax credits. Today, we've got other tax credits that become available. You've got renewable energy tax credits. You've got depending on what you are developing in real estate, you've got like Section 179D, and you've got a bunch of other like research and development tax credits that are just available for you to take advantage of, assuming you qualify. Credits are valuable because they're dollar for dollar. You have a dollar tax bill, you have a dollar tax credit, they offset each other. You have depreciation. Depreciation is really effective because you get to use leverage. Leverage means that although I put $1 and I borrowed and I got $10 out of it, I get to depreciate the entire $10, not just the $1 that I put in, right? So you buy a truck for $100,000, you finance the truck, doesn't matter what you put down, you get to depreciate the full truck value. Okay, that's depreciation, very valuable. Same thing with the real estate example we talked about earlier. Deductions. getting really creative with deductions, whether it's the Augusta tax strategy where you can rent your house, or whether it's kids on payroll or ordinary and necessary business expense deductions. All of these little things by themselves don't add up to a lot, but if you put them all together, they make a big impact. You know, for our clients, the average client we work with, we save over $150,000 in net taxes.
Wow.
And it's not one thing we do, it's 8 or 9 or 10 different things that we do to really move the needle. In construction, your WIP can be managed in certain ways that allow for you to kick the can down the road. So you don't have, you know, the tax bill you have today now becomes a tax bill you have next year. Well, the differential in cash flow may make a huge difference. Instead of you spending $200,000 on taxes, you can finance 5 other jobs.
Yeah.
Now you grew your business, and the next year we do the same thing, and then the next year we do the same thing. So offset your fiscal and calendar years so you have control over that. Right? So there are plenty of things, but here's the one and most important thing about taxes. Everything you're going to do needs to be done and fully implemented before December 31st. And this is where most people get it wrong. They don't think about taxes until February.
Right.
And by February, it is too late. And then your CPA gives you the bad news. And then you get mad at your CPA. And then you guys say, we're going to do it differently next year.
Right.
And then you don't.
So it's like you're reading my mind, because I was about to ask a CPA question here. How do you know you have the right one? Let's just start with that. You know, because I talk to you and you talk about all these deductions, like, and the average person, we don't know these things.
Right.
We're banking on our CPA to know these things. So how's the accountability work with that?
So let me piss off all the CPAs that ever listen to this.
Go for it, man. Let's piss everybody off today.
So one, it's not your CPA's responsibility to know this, nor do they know all this stuff, right? CPAs go to school, they get out of school, and the model they get taught, the business model they get taught is do as many returns as you possibly can by April 15th, and then do it again as many as you can by October 15th. It is a volume game. Okay. And as you know, the more complicated something is, the longer time it takes to complete. So if they are telling all their clients to do all these strategies, it's going to make things more complicated for them, which means their volume comes down. Inherently, CPAs are not built to give advice. They're built to complete a task.
Right.
They're built to file your return.
Yeah, they take information, make sense of it, and plug it in.
Right. So don't get mad, right, at them, because it's not their fault. They don't know better. So at the end of the day, it's working with somebody that is, you know, known for strategy. That's why we're built the way we are. We are never going to file a tax return because all we do is strategy. We know our lane and we're really good at it. But if you want me to file taxes, I'm not going to do it for you.
Yeah.
You got your CPA for that.
Right.
So the way you know if you have a good CPA or not, just to get started, is when they call you. If they call you in October for 2024, you have a good CPA. If they call you in February, find a new CPA.
That makes it pretty simple.
That's it.
Yeah.
Because it's all about being proactive. Remember, that's the rule. Like, we've got to do it before 12/31, which means we got to get started now. So we take this very seriously. So right now for us, it's like heavy tax season. We're going through all of our clients, identifying all the revenue, extrapolating their year. How are we going to finish? How's profit? What's the possible tax bill? Okay, we have the problem. Here's all the strategies. Let's implement them. By December 1st, everything is done and implemented. Because by December 15th, you know, I mean, everyone's closing their own years out. They've got vacations, they got holidays. So like by December 1st, we're done. They know, Tom, you know, this is how much I'm going to owe and this is what my rate's going to be.
Yeah. Yep. What haven't we discussed that would be helpful to people today?
Man, like there's a lot, right? There's so much that we can go into, but let me give you like the 5-minute just lowdown. 1, risk management. Make sure you're really, really clear on how you own your assets, and do yourself a favor and never own assets directly. So if you own your business, make sure that you have a holding company that you own that owns all the shares of your business. So separate things. You want to control everything and own nothing from an asset protection perspective. 2, go through and audit your insurance policies once every 24 months. Painful process, but very, very valuable if you ever need it. And 3, if you're in partnership with anybody, make sure that you go through and audit your operating agreement once every 24 months. Values change, relationships change, review that, right? And then, I would say 3A as a part of that is don't just buy an operating agreement off LegalZoom for $49.99. Create one specific to you. It's going to cost you a little bit of money, but it can save you a massive headache in the future. So that's that side. Taxes. Find somebody that can help you strategize. Get educated on what applies to you, your industry, and your business. In construction, and I'm going to say this, if you are paying taxes and you are in construction, you're missing something. It's one of the industries that has the most flexible tax rules. Because most people in construction, their entire life is roped into their business. So if you're paying taxes in construction, let me kind of go a little bit further. If you're paying more than 10% net effective, which means if you make $100,000 net and you're paying more than 10 grand, you're paying too much. Okay. So on taxes, find someone that can help you strategize, and then find someone that can help you execute. Meet with a CPA that's proactive. There's a bunch out there now. There's like a new school of CPAs that are really consultative. Like they charge a little bit more. They're not going to charge you $1,500 to just file a return. They're going to charge you like $500 a month.
Yeah.
Worth their weight in gold. The cost, right, of a CPA is your tax bill. So think about that.
Yeah. So dig into that. Construction is unique from the tax perspective. I'd never heard that before.
Construction is unique because let's think about this. I say this to clients and they look at me funny, then they agree. In construction, you guys are nothing more than a really fancy ATM. Think about this. Money in, complete the job, money out.
Yeah.
Right? So you guys are a fancy ATM. The more money you have, the more jobs you can do, the more money you have. So that middle piece, jobs, is where we get to be really creative. Whether you're self-performing or subbing out, you need equipment in some capacity. You need trucks, you need office space, you need personnel. Most construction deals happen through relationship. Well, it takes money to create relationships. Like my business is all relationship, and I love to fish. So I'm doing most of my relationship building on the boat. So I do it in a certain way that allows for that entire thing to be deductible. Now, let's be real. I'm going to fish regardless.
Yeah.
So I can either do it with a pre-tax dollar or with a post-tax dollar. Well, I'd rather do it with a pre-tax dollar.
Yep.
So if your thing is golf or your thing is vacate, whatever it is, figure out your thing and figure out a way to build relationships around it to make it a business expense. And then you guys have this amazing superpower where you guys get to build shit that grows in value. So no matter what side of the construction game you're in, it's a part of real estate, and real estate is one of the best assets there are. Get involved, acquire the asset. So your buddy who's flipping a house, right? Buy the house, flip the house, or remodel the house through the business, write the whole thing off, keep the house. Like if I could, I can't hang a picture on the wall, brother. Like if I do it, the wall is going to break and the thing's going to be crooked. The last time I did anything with construction, it was like 12 years ago. My wife bought a chandelier and she's like, hey, can we put it up? And I didn't have any money at the time, so I tried to put it up myself. A week later, I had to buy a new chandelier and a new dining room table because the thing fell through the dining room table. Now I was like, I'm never doing this ever again. My point is if I had the superpower to drive value in real estate like you guys can, I would.
So you're saying you wouldn't even flip the house.
No,
You would buy it.
I mean, look, I can't say that like as a blanket
but
strategy,
you know what
right?
I mean?
Like,
Right. But I
yeah,
mean, it's, you would just go, I'm just going to invest our profits into this, rent it out, and hold the thing and build the value.
depreciate it, not pay taxes, continue to build the value. Like, you guys get to buy one of the best performing assets at a 25% discount every time.
So you mentioned those that use subcontractors. So I'm that guy that when I see a little opening for something, I go, wonder how far the gray area is on this, without going to jail. Okay, well, I'll use me as an example. In July, I started a new painting company as a side hustle here in Colorado Springs. That's my background, built and sold one years ago. And we're a submodel. And one of my biggest complaints is that all my subs, and they're great guys, but they have like their own vans and this and that. So we're not lettered up. You know, we only have my vehicle. One of my vehicles right now is totally wrapped up with Simplify painting and stuff. So I'm sitting, when you said that, I'm like, can I buy trucks and lease them for like $1 a month to my subcontractors to use so that my brand is all over the place?
Why $1 a month, right? Like, why don't we double down on that?
Yeah, $2.
Why don't we franchise this thing or JV, joint venture this thing where it says, hey, you're really good at painting. Your truck's ugly though. So you're going to give me an extra special deal on your cost. In exchange, I'm going to give you a vehicle. Yeah. So now you got a deeper discount, right?
Yep.
You buy the vehicle, you get a full tax benefit on that vehicle. They're happy, right? Because they're not having to spend money on a car.
Yeah. The one issue that I see there is that a true subcontractor is working for other people, right? So I own Simplify, and then there's Claudio's painting that subs them too. They have this fully wrapped vehicle that's just me showing up on that other dude's jobs. That's a problem.
Maybe,
right? So,
or maybe that other dude isn't Tom, and maybe that other dude isn't a very good business owner. So maybe Tom can buy the other dude.
Yeah. If all the work they're doing is for me, then they're not really a sub.
Ish.
So
I don't know. Like, so to me, like the way I look at this is like market concentration or concentration risk, as we call it. If I'm the sub and you are the whole source of my entire business, that's my problem, not your problem.
Yeah.
Right? It would be my job to diversify where I'm getting my work from.
Right. My problem becomes when an audit comes and we haven't been paying work comp for that guy's company and stuff, then we get a big ass bill because we're
I mean, but there's so many different ways around that, right?
Yeah.
Because you can hire somebody, and look, this is like blanket advice. I don't know the details, but like you can actually hire somebody and put them on a W-2 salary, but you can also hire their company to do a separate service. So let's just say you're my sub. I'm going to hire you as a consultant, and I'm going to give you a W-2 for $30,000 a year, but then I'm also going to hire your company to do different things.
Yeah.
So it kind of bypasses some of that rule. And there's so much more to that. Like, I don't want to like.
So I could hire sub guy who owns the sub business as a project manager, pay him a salary and give him a vehicle.
Yes.
Yeah. All right. I see where you're going. All right. See, I like these gray areas, man.
But that's the thing. Like, most people think this is a gray area. It's really not, right? It's the rules. Like basketball, dribble the ball. That's a rule.
Yeah. And as long as you're following the rules and you're documenting shit,
that's it.
You should be good.
And that's the thing. Like, with everything that you do, document, because everything here is interpretation based, right? So how you're choosing to interpret the laws or the rules needs to be documented so that you have backup and proof in case anybody comes back and asks questions.
Yeah.
In the last piece of that, like 5-minute rant, is this. With uncertainty looming, and we talked about this last year, uncertainty never goes away realistically, right? Like if we think through the last 15 years of the economy, there's maybe been a year or two where it felt really good, but in it, it was still very uncertain. So the only way that you can prepare through an uncertain environment is to make sure that your business, the balance sheet is incredibly strong, and you always have the ability to turn a threat into an opportunity, right? So your ability to turn a threat to an opportunity is created by two things. Created by operational efficiency, like how well does your business run in times of chaos? And two, how strong is your balance sheet?
Mm-hmm.
The only time a threat stays a threat is when you cannot afford to turn it into an opportunity. So let's talk about a threat.
Yeah.
You are losing jobs over and over and over. Your competitor is just taking over. Why? What's going on? Is there something happening behind the scenes? You're operationally not efficient enough to be able to take on that job because your costs are too high, so your bids are too high, or are you just not doing it? Are you not selling it in a way? Is your salesperson not good enough? You don't have enough money to hire, train, develop the front end salespeople, right?
Yeah.
Or maybe you're not even getting calls. Your marketing is not good enough.
Mm-hmm.
Right. So that's really it. Like from a growth perspective, it gets as simple as that.
Well, that's business in a nutshell. It's just solving problems. Every threat is nothing more than a problem that you
Yeah.
can choose or not choose to solve. Phone's not ringing, we got to fix our marketing. If the phone's ringing and we're not closing deals, we got to fix our sales process.
That's it, man.
Down the line. Good shit. What is? I'll wrap up with this, and then give you a minute to kind of share what you want people to do. When you work with a contractor, they first call you, and there's probably an it depends to this. I get that, but if there were like one first move you go to every time you work with a new contractor, what's that look like, consulting wise?
There's two. There's like a 1-2 punch for us.
Mm-hmm.
One is taxes. And taxes are a lot of fun for us because one, I'm a nerd and weird, and I love that stuff. But two, like, I'm not cheap. We're expensive.
Mm-hmm.
But if I can create a 4x or a 5x ROI on my fee right away, right? Like, hey, I charge you 30 grand, which is about 10 times more expensive than the average CPA.
Yeah.
But I just saved you $150,000 in taxes.
I'll do that all day.
All day.
All
right?
day.
And the offer is so good, you'd feel stupid saying no, right? The Hormozy model.
Yeah.
So that's one. And then two is like, what do we do with the money? Right? Like, okay, hey, I'm writing you a check for 150,000 right now. Like, where's the first place we're going to invest? And we fix that with the client. That's the 1-2 punch. I got to hire a superintendent. Great. We just spent 100. Where's the next 50 go? Marketing. Great. What kind? Digital, mail? Like, where's it going to go?
Mm-hmm.
Oh, by the way, when we do those things, what's going to happen top line? It's going to go up 20%. Great. We got a bigger tax problem next year. Let's solve it.
And that's there's an old saying I've heard people roll around, and I might even in my ignorance repeated it through the years, but like where they'll say you want to pay a lot of taxes because that means you're making a lot of money. And you've totally turned that upside down here today.
Well, look, let me be very clear.
Yeah.
Depending on where you are from an income perspective, let's just say you're on the upper side here, right? $2 million of net income. I'm going to do enough to get your tax liability down, but I'm never going to lower you to zero.
Right.
Ever. Zero taxes means zero income. Zero income means no one's going to touch you with a 10-foot pole when it comes to loans.
Mm-hmm.
And without debt, you cannot effectively grow a business. You need leverage to be able to take things to the next level, especially start getting into bonding and equity value and all that fun stuff. You need really strong financials. And part of that is having verifiable taxable income.
Right.
So, caveat. But I agree with you, man. Like, more money does not necessarily mean more taxes. More money means more opportunities for you to grow. And we can do that in a very tax efficient setting.
I love it, man. So if I'm a betting man, I'm betting there's some people listening to this who go, how do I learn more about this stuff? And I know we have a link we'll drop in the show notes and stuff, but what do you want people to do, man? How can they reach you?
All right. So a few things. One, I'm on social media talking about this stuff every day, right? From risk management to exit strategies to estate planning to taxes. We're talking about it all. So my social, and you can find me on all platforms at Claude Gambin. So you can find me there. Two, I've got a podcast called the Invest the Difference podcast, and where I'm doing between 15 to 20-minute episodes, just long enough for you to be able to get it knocked out in the car ride to work or wherever your next job is. And we're going in depth in these strategies as well. But here's the next thing. Your listeners, I'm going to put up a link for you guys. The first 100 people that sign up for this gets a free 30-minute problem-solving session. I don't care what the problem is in the business. We're going to spend 30 minutes together, and we're going to solve it. Now, this is not a sales pitch. You're not going to get sold. This is us. So there's our consultants, myself, me even getting a call with me. We're going to solve a problem. If it's taxes, I'm going to tell you exactly how to solve it. If it's operational efficiency, I'm going to tell you exactly how to solve it. And then the last piece is I'm going to send you a document, Tom, and you do what you want with it, pass it out to everybody you want. But I've got a free tax resource that takes all the strategies we just discussed today, simplifies them. It's something that you can kind of give to your CPA and say, hey, man, do this.
Look at that. Man, dropping value here, man. I appreciate that.
Of course.
That's awesome. So guys, make sure you're one of the first 100. A lot of motherfuckers listen to this show, so be one of the first 100 and take advantage of this, because as you can, I feel like you're you're that race car that they put a governor on when I interview on a podcast. Like, we can't take the leash off. The governor's still on. There's so much more. There's so much. I know it's so hard, in this format.
Yeah, we covered
to go
10%.
deep on anything, but yeah, it's we covered very little of you and your team's knowledge base, and I appreciate you spending some time with us. What's your website and all that?
gfgsolutions.com is our website. Again, socials at Claude Gambin. And again, I'll kind of send you the link and send you these resources, and you can pass it out.
Yeah. So guys, check the show notes for the link if you want to grab that consultation and that other download and stuff. We'll make it available. Claudio, I appreciate you, man, being part of the fight here today. I know you helped a lot of people. You opened up some eyes. You taught me a few things I didn't know, which it's actually kind of easy to do, but you did it anyway. So there you go. There's a lot I don't know.
Hey, man, thank you. I appreciate the opportunity. Really do.
But I appreciate you. And by the way, I should have asked you in the beginning. You're in Florida. Are you anywhere near the problem down there right now?
No, dude, we got missed. It was like, thankfully we got a little bit of rain, a little bit of wind, but that's it. We're in Central Florida.
Good deal. Well, glad to hear you're safe, man. So,
well,
guys, hit the links, set a time with Claudio and his gang to get some help on the current problem that you're having with your money. Share the show with another contractor, because a rising tide lifts all boats. And that's what we're trying to do here in the fight. And for God's sake, guys, we're almost at 1,000 episodes on this podcast. If you haven't given me a review yet and you've been listening to more than 1 or 2 episodes, give me a review, please. So again, more contractors can be exposed to the things that we're doing here, so we all get better together. And with that, you guys rock. I got to roll. I'm out.
See you.